Bwiso is the Chief Executive Officer and has overseen the exchange of Uganda for over 4 years, offering strategic guidance to the management team and successfully leading it through a corporate rebrand and restructuring and the demutualization process that has seen it transform into a public company. Paul has a wealth of experience spanning over 18 years and a vast exposure in financial management, business analysis, mergers and acquisitions, and regional capital market operations. Prior to joining the exchange, Paul was a general manager of Dyer and Blair Investment Bank Uganda office. Paul holds a Bachelor's of Commerce degree in accounting and has skills in valuation, business analysis, and wealth management. He sits on the board as an executive director and is a member of the Chartered Institute for Securities and Investment, London. All right, thank you so much, Paul, for making time for us today.
Yeah, you're welcome. Thank you for inviting me.
Amazing. So we do know that the USC was officially, of course, licensed in 1997. And in 2018, that was last year, we did see a rebrand of the Ugandan Stock Exchange. So what does that rebrand entail?
Well, we thought at the time that after 20 years of being in business, we needed to reinvent ourselves. And one of the things we realized was that the capital markets and the exchange in particular in Uganda was not well known. So we looked at changing the brand, but to create more awareness. So we invested quite a bit of money into the rebrand, but also reaching out to the public. We went onto radio, we're writing articles in the papers, but the objective was to be noticed and be heard, because the comments had been, or the survey we had was that we were quite quiet and unknown, and people could not differentiate us between the Capital Markets Authority and the exchange. Okay. Yes.
So how have you seen the fruits of that particular campaign so far?
Yeah, I think the fruits have been very positive. We've been able to reach out to a new set of clients. I'll give an example. We had an IPO last year, and of the new investors, about 90% were new investors who actually advised us that because of our campaign and being out in the public eye, they actually thought that the stock market was an interesting thing, and that's why they participated in the market. The other thing we saw was that investors took our brand took a new look. Our catchphrase is actually inspiring growth. Now, what that means is that we inspire growth in all sectors or all avenues of life. We want to inspire companies to raise capital, but also grow and give a return to their investors, but also provide services and products to the people. We've seen government get involved with us a lot more. There's more communication between us and the Ministry of Finance. We are involved in initiatives. So the brand actually, we got recognized out there, and we think we're on the right track.
Okay, amazing. Yes. And we were just talking a little bit before we started this, and you were telling me you have about 17 listed companies, and you have quite a few Kenyan companies that have cross-listed from the NSE. And the initial one was in 2001, Kenya Airways, and then, no, sorry, that was EABL was the first one. And then, of course, you had Kenya Airways in 2002. And since then, you've had a couple more as well. What sort of benefits do you see these cross-listings to have?
Well, I think at the time, the idea was to provide shareholding to local investors in Uganda for companies that did participate in the Ugandan market. If you look at most of the cross-listed companies, Equity Bank, KCB, EABL, they all have local presence in the country. I think where we did not benefit as an exchange and a market is that most of the cross-listed companies, I think with the exception of Centum, did not provide shareholding into the market. So it is more of showing a presence of their stock price on the Nairobi Stock Exchange, and then if investors want to participate locally, they're able to contact their local broker, the brokers in the Nairobi market, but also just to give the investors a presence of the pricing. So as an exchange and a market, we think we've actually been rethinking the whole idea that what we're actually doing is more of advertising and not promoting liquidity. That was the original objective for that. Yeah.
Okay, so you need to take that a little bit further then, like you said.
Yes.
Okay.
Yeah, so the idea is to now encourage these companies to actually provide some shareholding. Now, one of the mechanisms we put in place, you know, Meme trades on the local bourse here,
yes,
but also in the primary market. We put a mechanism between the two markets where you're able to move shareholding from the CSD in Uganda to the CSD at CDSC Kenya and back, to take advantage of not only consolidating your portfolio, but also taking advantage of arbitrage. And we've seen movements between both markets in a couple of millions of shares over the last 2-3 years.
Okay.
Yes.
Amazing. You know, let's talk a little bit about the East African Securities Exchange Association as well, because your Rwandan counterpart had, of course, also elaborated on that previously with the trading bell, talking about how it's a way for all the security exchanges within the region, East African region, to come together and then collaborate. So what do you think is, you know, the way forward for it to be able to even deepen that sort of collaboration, as we were also just talking about that?
Yeah. Well, the association is really partnerships of us coming together, or the different stock exchanges coming together to work towards harmonizing. I mean, we all know about setting up the East African Community, one market, monetary policy coming in 2024. So what we are doing internally is to make sure that securities are tradable across the markets and access to capital, but also to investment options is brought across the market. East African Community. One of the things we've done, or we did this year, was we came up with the East African Capital Markets Day, and this was in Rwanda earlier this year. I think it was on 27th of May.
Okay.
Yeah. So what transpired at that is that we had conversations, invited different stakeholders within the capital markets industry, and these were able to talk about sensitive issues, things to do with liquidity, things to do with SMEs financing, things to do with raising capital for government and these large infrastructure projects that are ongoing. So what this has been able to do is get new ideas put on the table, but also create more collaboration. Because as an association, we meet twice a year, but we also have technical committees that come together and address different issues that have been raised. So we have a committee dealing with technology, we have a committee dealing with liquidity and access to capital for SMEs. And I think all these innovations that you've seen, say, the next derivatives market, and were discussed or originated in some of these meetings. And we would like to congratulate NSE on this milestone.
Absolutely. The next derivatives market that was, of course, recently launched. Is Uganda very far from also having a derivatives market option?
It's something we've considered, but if you'd say 3 to 4 years is far, wouldn't think that would be the case. So one of the things we've done as the Uganda Securities Exchange is look at diversifying our products. We've been an equities and bonds market for the last 20 years, but the equity space has been quite challenging over the last 4 or 5 years, with a lot of private equity coming in, banks reinventing themselves and lending at lower rates, with DFIDs giving concessional money to companies in particular sectors, especially agriculture. So attracting businesses, and maybe just to add, the family businesses in East Africa are quite many, and they're the majority of companies.
Yes.
And those are not really keen on coming to the market without really the sufficient education. So as a market, we looked at the different options, and we opted to set up a spot commodities market.
Okay.
We're currently in the process, and we've submitted our application to the Capital Markets Authority in Uganda for a license to operate a commodities exchange. We believe that by understanding the commodity spot market, we can then move to the derivatives market, because we'd have an underlying product to work with. Why we're unable to do it with equities is that our market is quite illiquid. We have quite a number of large pension funds that hold long term, so once they're IPOs, we don't see a lot of trades happening thereafter, because the pension funds mop up and hold. So in terms of average trades, I'll give an example. This year so far, 91% of the transactions have been foreign institutions. on the market.
Okay.
Yes. Yeah, so we believe that the commodities market will play a big role. We are big on agriculture in Uganda. We've got all sorts of, I would say, products for export, local. We're big in maize, grains, sesame, sorghum, paddy rice. So we've worked on the details, put in place the standards. We've got the technology already. And what we're waiting for is to address one or two issues with the authority and also work with the warehouse receipting authority to put in place certain requirements. The beauty about it is that we've had a Warehouse Receipting Act since 2007 and regulations. And we thought that this was space that would easily venture into.
So it's a very exciting development, and we're looking forward to seeing how that goes even further. But even like you mentioned, a lot of the larger companies within the region are owned, family-owned, and so that private equity, sort of standpoint still stands very strongly, as opposed to them being able to invite shareholders into having a chunk of the company. What is one way that is able to convince them most likely to be able to open up?
I think there are many factors that we need to address, some systemic, because the companies need to be aware of the benefits of equity versus debt versus raising money from private equity, the different sources of capital. Now, the risk is not really in the family diluting.
Yeah.
It's about more of operational control. Because I think that's where they believe they would lose touch. Because when you have an effective audit committee, it puts in check all those ownership controls of, I think I recall there was an investor who told us that his mother would generally just walk into the business and ask for cash from the accountant and leave, and said, would that be able to continue? And of course we said no. So he started changing his mind about that. So it's more of the operational control. Some of these companies are actually good. They file their taxes, they've got their books in order, they've got good advisors at the board, and they're quite ready. But it is moving to that step of, hey, you're not losing control, but you just have more investors to give back to, and to also share with the community you're working with in terms of investors. So we at the exchange have been speaking to companies. We actually usually have on a monthly basis some sessions where we call maybe one or two investors with their financial advisors, accountants and directors, and we take them through what the process is. And we advise them that the difficult part is the early days. After a year of being on the market, the rest of it is pretty straightforward. You know what the obligations are and what you need to do to keep your investors informed, because the capital markets or the stock exchange is really about disclosures.
Absolutely.
Once you put out your information, the rest is for your business to grow, for you to work on your business and grow it.
So it's also that corporate governance angle together with the control that plays into that particular aspect. But even as we wrap up, some of your future ambitions for the USE for the rest of the year that you would like to share with us?
Yes. We have been working on trying to provide a solution to our investors to be able to deposit money seamlessly through their funds. So we're working on both a USSD and the app solution to move money. And we hope that later next year we should be able to upgrade that to enable them to place orders. Yeah. Digitally. Yeah, so that's one. We have a potential issuer we're working with. We don't know how far, whether it will be later this year, but that is keeping us busy. The other is we are working with the Ministry of Finance to discuss potential tax incentives and solutions to attract companies to the market, and continue with our project on commodities, which we think has a lot of potential, considering the challenges commodities exchanges and markets have had in East Africa and Africa at large.